Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Investors and analysts are anticipating China to deploy as much as 2 trillion yuan or $283 billion in fresh stimulus as Beijing moves to support the world's second largest economy and boost its market confidence. China has previously disappointed investors who have hoped for very large stimuluses, but we will wait for Saturday. Shares in Asia rose, brushing off losses on Wall Street after hotter than expected inflation, increased speculation around the Federal Reserve's next move. It was a volatile session for currencies, with the dollar strengthening initially but ending the day flat. Good morning, Pankaj. Great to have you back. How do you interpret the CPI numbers, and what's your take on the Fed's rate path moving forward?
Thanks, Swaraj, and good morning, everyone. What I will think of is basically how the Fed members are reacting on this data. So yesterday there were around four Federal Reserve members spoke on a different occasions and events. Out of them, three were actually very unfazed by the higher than forecast September numbers, and they are mentioning that the inflation uh, path or trajectory is lower. There would be a midterm bump or some unexpected thing, but the path is very clear, and inflation numbers are likely to go according to their projections or their target. And this suggesting that the U.S. central bank can continue lowering interest rate, while the another member, Bostic, which clearly said that, or it's basically hinted that a pause at their next meeting. So looking at overall, this Fed member speak and the data, even that even after that, the Fed probabilities for the next meeting stays around 85% to have a 25 basis rate cut. The mystery of the US job numbers and the inflation data with regards to the outlook for Fed policy still remain unresolved or unsolved. As per policymaker, or as such, these policymaker will need to treat carefully. But our base case remains that 25 basis rate cut both in November and December, and then we will take a fresh look after that. After inflation data, 2-year yield jumped to the 4.09% and 10-year yield jumped to the 4.12%. But today morning, they are back to 396 and 407 respectively. And all it does happened because Fed members spoke slightly dovishly. If we look at the another data point which will be coming today, and there is an expectation that there will be further moderation in that PPI number, and the fall in PPI number eventually should show up in the CPI data as well in coming weeks, coming months. In Europe, despite two distant numbers from Germany recently, retail sales and industrial productions, investors remain guarded on the economy. Analysts do not rule out another quarter of a negative growth, pushing Germany into technical recession. This is due to the structural issues of the economy, still dependent on old model of growth, dependent on cheap energy and trade surplus. So basically, whenever the energy prices goes up, Germany gets into some kind of a concern. We wait to see how the ECB reacts in the meeting beyond October 17. And next Thursday, they will almost definitely see a rate cut by 25 basis point. And after that, what happens? We need to be watchful. Being an inflation hawk, their commentary might be that forward guidance would be a data dependent. The Bank of Korea today morning cuts its benchmark rate after holding the rates for 2 years. And the cut came because local property market started showing sign of cooling and inflation pressure eased sharply. The now 7 days repurchase rate of a Bank of or of a Korea, or as said by the Bank of Korea, now moved to 3.25%. By this move, we can say that the Bank of Korea also has joined the other central bank for changing course to embark on an easing cycles and in a bid to revive economic momentum since the inflation pressure has cooled off. Coming to UK, data will be coming in, but there's a MPC policy decision next month. And before that, what will happen is on October 30th, the Chancellor will be delivering a autumn budget. And there's an expectation that this budget will be a very tight budget with respect to moving towards a focus on a growth. And since could be a tight budget, what happened that the balancing activity will be done by UK MPC and there could be a rate cut. Coming to China, Swaraj, the rallies which we have seen in post-stimulus announcement of a 25 and 30% in China and Hong Kong stocks, they actually fell off on Tuesday and Wednesday. On Thursday, they saw a bounce again, maybe again expectations building up. There will be a further stimulus which will be announced, as you mentioned, Swaraj. And there is a set of investors that they think that this time it will work, and authorities are also insisting or persisting that this stimulus should work. I have read somewhere that this announcement is probably a buying an insurance policy for Chinese economy rather than providing a bazooka. Let's see how it moves on. USD index, we actually post a NFP number and even after CPI number, dollar initially strengthened. And yesterday we saw that index hit a kind of a major resistance zone, which is lying between 103.25 to 103.50. Index has already retraced its 50% of a up move, sorry, a down move from 106 to 100.15, and this should consolidate now, and this retracement should be a very strong resistance. At the same point of time, now we are lesser than a 1 month of a US election, and this should get into a dollar into a consolidation move, maybe a 102 or 103.70 75 would be the likely range in coming days. Accordingly, we expect euro should be moving between 1.08880 and 1.1050. GBP should be in the range of 1.30 to 1.3250. Dollar yen between 146.50 and 150. Yesterday post data, precious metal also saw a good move up. Gold moved up by 1% and silver moved up by 4%. Sorry, 2%. And crude oil and both crude oil indices or maybe a benchmarks, WTI and Brent both jumped more than 3%. And I would say that they are also primarily jumped up by driven by a Milton storm. Let's see, because there is an impact on the US side. And we know that there is an Iran-Israel conflict continuing too. So there would be some pressure on a crude oil at this point of time. Coming to India, both bond and Indian equities was kind of a flat. Indian equities, so Nifty closed very flat. Indian 10-year yield moved up by 1 or 2 basis points and closed at 677. Indian Central Bank also concluded a buyback of GSEC aggregating rupees 24,000 crores. Indian CPI is likely to be released on Monday, and this number would be printed higher than 5%, likely to print higher than 5%, primarily due to fading base effect. And we are likely to see another trade deficit number, which is actually likely to be lower than previous number, which was 30 billion. We are expecting closer to 24 billion dollars. What we are seeing is a good move happening on the premium side, dollar rupee premium rather than a dollar rupee spot moment itself. So what we have seen is a 1 year premium has moved closer to 15 paisa lower post upticks in US yield. And October has been a very hard month for Indian equities with respect to FI outflow. We have seen a closer to 7.5 billion of selling from a FPI in last 8-9 days. But all thanks to RBI, RBI is thinking that or acting as that we should not be seeing 84 at this point of a time. So we see a good amount of offer at around 83.98. Wish you all the best, a very good and a kind of a good festival, Dasara, Durga Puja, and we will see you back on Monday. That's all from me. Thank you.
Thank you, PR, for a very comprehensive coverage. And I think what you mentioned about China, the hopes of investors before they expect some more stimulus this weekend. And as you mentioned, the China's rally post the stimulus have retraced quite a bit. So somewhere I think I remember the quote by Charles Dow, who's the founder of Dow Jones Company, who says markets discount hopes and fears of investors. Maybe this is one of those situations where this weekend also somewhere participants are expecting some sort of a large stimulus. So just quickly summarizing a few points. Probabilities of rate cuts stay similar to what they were before the CPI. So 85% being assigned to a 25 basis point cut. We had a number of Fed members speaking yesterday after the CPI. Three were quite pragmatic about inflation numbers, focusing on the overall trajectory, which is lower. But one member hinted at a possible pause in their next meeting. And just for Rupee, we have a good movement happening on the forward premiums. 1 year premium has moved lower by 15 basis points as US yields rose. FI outflows in October has been around $7.5 billion, which is a large number, but thanks to RBI, rupee has been well supported and not allowed to weaken past 84. That's it from us today. Thanks for listening. Tune in on Monday for the latest in the financial markets. Wishing all of you and your families a festive season.